Good morning. Stock market's going to open soon. Yeah, boy. Let's go. Big fan of jazz. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small. Stay humble, focus on the long term, never risk money, cannot afford to lose. Oh, I see. It's a web page. You can't see it, but a web page just popped up, and it's like, it's going to reload. It's my homework. So hang on. Not sure why that popped up. I think I can close it. All right. So anyway, sorry about that. I don't know why it just popped up. All right. Hey, good morning. How you doing? Nice to meet you. COVID. My name is Wayne. I'm a currency trader just like you. Been doing this, a while. Hey, you know what? I just realized I still have this jacket on. Yeah. I can dress nice for you. Huh? What do you think? Will you donate money to my church, huh? Hey, good morning. My name is Wayne McDonald. I'm a currency trader, just like you. Been trading currencies for a while, and I still love it. Years and 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 years in front of my chart almost all day. And I still love it. I compare it to other opportunities out in the world, and Forex is still the best. You got leverage, you got liquidity. Oh my gosh, you're mark to market, you're taxed right. It's really, really amazing the opportunity. The opportunity we have in front of us. The Church of Pips and Pivots is pretty funny. Yeah, I did a presentation in class recently, so I had this on my chair, and I'm like, hey. But anyways. This opportunity we call Forex is really, 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 really huge. And I hope you're taking advantage of the opportunity that is in front of you. 35C here. Yeah. Middle East usually gets, 42 and stuff like that. Georgia doesn't get that hot. They always call it like hot Atlanta, but Georgia rarely gets over 92 degrees Fahrenheit. Rarely. It just never hits 100. But if you're in like the one I always think of is Austin, Texas, because they say Atlanta's hot and humid. I'm like, yeah, I guess so. Don't do yard work then. But if you go to, what did I just say? Oh yeah, Austin, Texas. 5 o'clock in the morning. It's already 110 degrees. Already. First rays of light. Chow! 110. And humid like walking through a cloud. So I don't know why they make such a big deal about hot Atlanta and humid Georgia. It's nothing. People complain. Cool. Oh, you guys like, the funny thing is, Forex robbed me of a few things. One of the things that Forex robbed me of is sort of the business mantra, like you don't have to leave your house. I like leaving my house. I like, so if you knew me 30 years ago, when I went to an office every day, let's say like when I was a venture capitalist, right? So that was the last time I had a real job. Anyways, the way I'd shop for suits is I wouldn't just go to a store and buy a suit. This is just, Ralph Lauren or something. What I would do is I'd go to the vintage stores, and you can imagine, let's say, a whole row of men's suits, all of which are worth about a nickel. By a nickel, I literally mean 5 pennies. I would walk and I would rub my hands on the shoulders, and I'd just walk down the aisle. And all of a sudden, I could, just by feel, I could tell if it was a quality suit once. And I'd pull it out, and if it just happened to be pretty close to my size, I'd buy it. I'd pay the $5 or whatever, right? Then I'd go have it, first of all, washed 10 times, and then I would have it tailored. And I would take these old, like, really cool suits from the 60s, and I would have them retailored for me with, I'd take care of the bell bottoms and stuff. But it was really cool, and that's kind of what I wore around the office. The long story short is I love suits. So I have memories of me laying in Bryant Park in New York City, having done 10 meetings already that day, and I'm in a 3-piece wool suit, sleeping in the shade, the shadow of a tree in Bryant Park, and then waking up, going into the New York City Public Library, washing up in the men's room, wash up, get my hair all clean, and go. Again, I'm wearing a beautiful 3-piece suit, and then off to my next meeting. Those are my memories, and so I feel comfortable in a suit, and then. Right, and lots of men are like, I can't wear this tie, it's choking me, I feel so uncomfortable. And men, I'm like, oh yeah, I love suits. So it's really funny, like you guys are like, oh, nice. I love wearing suits, and I rarely have a chance to do it anymore. It's really sad. It's really sad. I love wearing suits. Yeah. Yeah, and by the way, the reason I used to like sleep in Bryant Park, it sounds really weird, right? This was back when I was running a startup in San Francisco, and I'd go to Silicon Alley to do things like I did fundraising, right? So I met with VCs and stuff. I've done media tours, right? So I would meet with 5 or 6 or 7 magazines and TV shows and stuff. This is back way before Forex. And so I did this very often, and to save money, and I was very conscious of this because it wasn't just my money, it was investor money too. What I'd do is I'd take the red eye from San Francisco, I'd land in New York, 4:45 in the morning, and I'd get to New York City, but I'd planned everything, obviously. So I'd have a breakfast meeting. Then I'd have another breakfast meeting. Then I would have an 8 o'clock, a 10 o'clock, and whatever. And I would just stack all these meetings. And then at 4 in the afternoon, I could actually check into my hotel. So I'd take my little Pullman with me. Okay? And I'll tell you how long ago this was, and then we'll move on. But some of you guys might like this. I've always had the coolest devices. I'm one of those entrepreneurs that I always need the best or the most current. And so, for example, I was the first guy to have his PDA. It was like a Palm Pilot thing where I could shove a card into it and turn it into a cellular phone. And I'd put an earpiece in my ear and I'd walk around talking to my PDA. And people are like, oh my God, what's that guy doing? He's crazy. He's talking into the air. He's talking into the air. Like, this is before that. I had this device. It was made by Casio. Okay. It was a little device about yay big, and you would open it up and it'd have a little keyboard and a little ASCII screen. And on the back, it had the earpiece and mouthpiece like a phone. And so check this out. So in this memory that I have of me in the 3-piece suit laying in Bryant Park, I would get up, clean up, right? And then I'd walk over to a payphone. I'd dial an 800 number. I'd stick the device to the phone, and it would go, ee! kind of like Matrix, right? And it would download email. Then I'd jump into a cab. I'd go across town to wherever I'm going, and I'd read my email, and I'd write my email. Boop, 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 boop. And then I would jump out of the taxi once I finally got to where I was going, go to another payphone, dial the 800 number, put the phone to the device, and it would send all my data and receive any new emails. And then I'd go into the office. Like, holy smokes, James Bond stuff back then. Really cool stuff. Neat, right? Those were the days. So thank you for coming on a journey with me in the land of Wayne McDonald. I'm glad you're on this journey with me. Thank you very much for being a subscriber of Forex.Today. Thank you for your likes and your comments. I appreciate them. And thank you to Traders Way for being the sponsor of our community. All they're asking is an opportunity to earn your loyalty and respect. So please visit Traders Way and open up a demo account and start the relationship. Okay? Yeah, Bobby's like, what's a payphone? Yeah, this is very interesting. So the world is always constantly changing, and it can be a playground. So I think we're going to have a nice journey together. We got some cool things coming in the future. If you have half a brain, a ridiculous, sickening work ethic, and share the same vision. Cool. So let's take a look around. Kiwi's getting crushed. Stupid Kiwi. Stupid, stupid, stupid Kiwi. Aussie's doing all right. Pound's doing all right. CAD, meh. Yen gaining. Dollar, sort of something. And Swiss strong. So generally speaking, let's kind of put this together here. Euro's like, let's call this neutral. Doesn't help us at all. Aussie, sort of, I'll give that sort of a neutral. Pound more up than down, but Kiwi down and CAD down. Okay. So this neutral, this down, 2 is greater than 3. Okay. So commodities down. Okay, that's generally risk off. This is risk off. This is risk off. And I don't know what to call this. Okay. So this is more risk off than risk on, which goes back to our point yesterday where it looked bullish and made us like, yeah, but I'm still bearish. And we talked about that. So what does that mean? It means everyone gets a turn. Right? So be careful because it's off. It's risk off to kind of neutral. It smells like mediocrity. Right? Smells like mediocrity. All right, so I was wrong in Bitcoin. I said 10,500. I'm sorry, it was 11,500. Sorry. But let's just review that we anticipated a test of 9,000, then this would go to 10,000, then it would go to 10,500. That's what we talked 2 weeks ago about. So I'm sorry it went to 11,500. Sorry. Now, okay, now what? Well, I'm going to put this as a risk on so that kind of muddies the water a little bit, but everything's going asset by asset, right? So Bitcoin's doing what Bitcoin wants to do, and that's totally fine. Now, what is your takeaway? Let's go back. Okay. Okay. This is the end of the collapse. This is everything coming back, and I think you should stay with the trend. I chose long time ago, I chose to be a trend trader. It's just, how do you make a decision to be a bull or a bear? You can make it multiple different ways for all different types of reasons. But instead of intraday trading, which I do, of course, and scalping, which I do, of course, I had to sort of pick like the primary methodology. And trend trading is just something I prefer to do. I'd rather, if the trend is up, I'd rather bet on buying a dip than selling a rally. Now, for some reason, and maybe things have changed, but there was a time when I'd meet a lot of new traders doing FX bootcamp, and the primary thought process, it seemed, with a lot of new traders was, it can't go any higher, so therefore I'll sell. And they would sell in uptrends. It was really just crazy. And so maybe even part of that reinforced my own maturity as a trader to say, well, that doesn't seem to work. So if I was going to bet, I would bet on the trend. Okay. Okay. Forex, we already have 100% macroeconomics course. So why don't you just take that? Okay. Oh, is HK, you're saying Bitcoin's going to go to 40,000 by the end of the year? Then you should buy some Bitcoin. What's up? What's up, Joey? So anyways, Bitco's hot to go, HOTTOGO. What are you going to do about it? Well, right now, if you're doing technical analysis, let's drop into a smaller time frame. Okay, you're already setting up tomorrow, right? La, 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 la. Okay. So, if you do just normal day trading and you do your job properly, we were here at the start of the day, it was elevated, and you said, I want to buy around 10,500. In fact, you want to buy 10,575. You knew that, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 hours. You knew this 13 hours in advance. Okay? Minimum, because you actually knew it over here too. But this was set 13 hours ago. And you're bullish on Bitcoin. You love everything there is about Bitcoin. So you knew you were going to buy it at 10,575, right? Right? So you did. Right? Does it have to be more complicated than that? Is it enough to say, I'm going to buy it as a bull on the central pivot point? Is that good enough, or do we need to make it more complicated? Is that fine? So the target today is $11,466.62. Are you okay with that? It might go as high as $11,658.31. Blue Boy bought it there. Nalu bought it. There you go. And congratulations. Now, on the flip side, this is where you'll be challenged. So always think of it, now that you're in, think of what the bears are going to do. The first thing bears are going to want are a 618 Fibonacci retracement. So we'll mark that. The second thing a bear would do would sell a double top, which is your target anyways, which is the reason I popped that up there. So if you're a bear, you have two plans. You're thinking this, or if that don't work, you'll try that. Okay? Am I right? Of course I'm right! Gee whiz. Okay? Any questions? So to translate that to maybe risk management, if you're a bull and you bought this and this happens, you might take a small loss. Because you don't want to get out here. You want to get out a breach of here. So if you're a bull and you bought it, then you're kind of facing this type of risk. Okay? Now, if you're lucky and it goes higher than this risk area and goes up here, you're able to move your stop to break even. And because it might do this. But I'll tell you, if you bought it low, it's because you expect the higher high. So you expect this, you expect this, you expect this. And when it makes a higher high, then maybe you can move it. Okay? You see it? So Forex Squala, are you going to take the macroeconomic course at FX Bootcamp? You said you want one. I made one 5 years ago. In 4 hours, I forget how long it is. It's much longer than 4 hours. But in the 4th hour, you will be managing the balance sheet of a commercial bank. Okay? Which means you'll know about the assets, the liabilities, and the bank equity, and how, let's say, deposits move around the bank, including the required reserves that the Federal Reserve mandates, as well as the bank manager's decision on excess reserves and where they fit on the balance sheet. You will also start to learn about the fractional banking system, okay, so that you can manage this balance sheet properly at a commercial bank. Because if you can't manage JP Morgan, how the hell are you supposed to understand the Federal Reserve Bank of the United States? So we do this before you even learn about central banking and the Fed. Okay? So there you go. Forex Squala, get in or get out. Get on, boy! Okay. Okay. So that's that. Gold and silver. I mean, we already know all this stuff. I don't know if we should do it again. I guess we'll do it again. Okay. Okay. So yeah, I mean, it's just we know all this stuff, so yeah, I guess we've got to do oil. Oil's, again, just farting around. Remember these ranges I drew for you? And now we're sort of in the middle of the range. Now, the nice thing, though, the one I don't know if you want this, but this and this target that, which gets us to the bottom of this range. That's what smells like is happening. So maybe if you were just a scalper, not really a scalper, this is sort of a, I don't know what to call this. It's a sort of a late swing, but you know, by Friday we should be down here if you're going to take it down. Or you day trade, right, by selling rallies. Okay. Make sense? Later, FT9. La 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 la. Look at that, just crazy, huh? So Brent is trying to come down, and who knows what's going on here with WTI. It'd be nice if Brent would lead the way. Okay. Crazy, huh? Just toy. So this Tuesday I have classes. Next Tuesday I have a final exam. Oh boy! I can smell the finish line. This week I can smell it. Next week I step in it. Peter, Brent is out of the North Sea, so you could call it British oil or you can call it international oil. And WTI is from West Texas. And it's an intermediate oil as far as its viscosity and its chemical composition. Okay. So dollar seemed like it was a mixed bag too. Blah, blah, blah. Thank you, Blue Boy. I'm almost there. So this coming down. So we did this yesterday. I set this bullish, bearish. Now, I don't think we need to be on monthly, but let's get that to hourly. So pound is doing what it's supposed to be doing. Okay. So we got to get through 29, and then we got to get through 30, but it's not doing it. Okay. So you could look at it maybe this way. So let's see how difficult it was to trade British pound today. Your buy was 128.53, so it came down to 128.53. You bought it, and now you're up 50 pips. Yeah, good thing you had this giant green buy zone. Good thing. Good thing. Good thing, rabbit, good thing. Good thing. So hopefully it makes a higher high today, eh? Got to get through that 29. Now the interesting thing is if we don't get through the 29, it's over. It's done. Ish kaputya. Adios! Panda dollar. Right? So it's an if then. Yeah, what about a triple top? I have it set as a bull, as I explained yesterday. So a bull wouldn't think about triple top. Okay? If it triple tops, I get knocked out at break even. Who cares, right? So you're supposed to be in here. Standard operating procedure, sort of like day 2 of the training course. You'd be long here. So if it triple tops, what happens? Nothing. Okay? What a bull wants is this. We call that a trend. Up, 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 down, down, buy. 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 Up, 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 down, down, buy. Up, up, down, down, buy. Up, up, down, down, buy. Up, up. I mean, I know, too simple, right? You're like, it's too simple. That's too simple. Wayne, that can't work. It can and it does. You can and you will. Well, Christian, as you already saw from the indices, the yen is moderate to strong. So you would, right? You would anticipate that based on relative strength. You should already know all this stuff just because that's the first thing we covered were the indices. So you should just be able to go and you see all your charts. Okay, so I have this set bullishly as well. Okay. Up, down, down, buy. Up, down, down, buy. Up, down, down, buy. Up, down, down, buy. Up, down, down. And we're actually on tomorrow's buy zone. As they say in Italy, the buy zone. Hey, Tony, when are you going to bother your dollar? When it's in the buy zone. Yeah. So FD9 says we're already at the monthly R2 on Pig Dog. But then you would add that to your analysis and decide what to do. You want the green zones. They've been available for 6 months. Metatraders.com. Short fans. I'm sorry. Short funds. Okay. If you're a bull. Well, the thing, guys, if I can use emotion as your teacher or mentor, you might actually remember. That's the whole point. Okay, that's the whole point. No, Danny, I already did gold. We already did an overview of all commodities, so it's just redundant. Now, it might be slightly different based on the short-term relative strength of the actual underlying asset class in the moment. But again, that's irrelevant because you would have bought it yesterday. So right now what you should be doing, Danny, is asking yourself, what are you going to do tomorrow? So covering it when I've already done all commodities, relative strength of the entire thing, boiled it down to global macroeconomics, and already covered gold, you have way more than enough information. You should be able to I should be able to just give you a blank page and you draw out silver now. So I'll challenge you on that. Okay. Is that right, short funds? So you're going to buy me a cigar? Put a tip in the tip jar? $50 goes a long way. Put 1% in the tip jar. Oh, I don't tip 1%. Yeah, right there in the super chat. Actually, I don't even know how to super chat. Yeah, $50 is about right for a bottle of wine. But I store the wine for years, and I store the cigars for years before I smoke them. I store the wine in the wine cellar for years. Yeah, there is right here on the super chat. The only thing is I actually don't know how to withdraw the money. So I got to be careful with that, but I suppose they owe it to me. But I don't know how to use super chat. It's somewhere. That's how you do it. All right, so CAD. Okay, we'll do some CAD. And by the way, this should be inversely correlated with, right, to silver. New Trader says, gold go up again? I don't answer questions like that. It sounds like you're asking me financial advice. All right. So what do we want to do here? Well, you can see that we are losing our, in this case, step downs. It's one way of looking at in the short term, right? Whether the trend is moving down. Yeah, I almost did it today or this week, Ron. But instead, I went to the country club with the family, and I got to invest into that too once in a while, right? But I look forward to it, and I'll do more in the future. No, Kev. Thank you, Kev. No. The last thing you would do is wear a suit to meet a billionaire, right? It's kind of like being invited to a giant cocktail party in some beautiful house, and you show up wearing your gardener outfit, and then you ask him, "Hey man, who cuts your lawn?" Like you just, no. There's a different way. You might wear a suit to the due diligence meeting when you meet with the due dili team, right? Because they're all accountants and stuff, so you'd wear a gray suit. But no. You know the billionaire in the room because he's got long gray hair and a outrageous suntan. Probably has like stripes right here from wearing sunglasses all day. And you're like, okay, that dude's been on a boat. And he clearly isn't in an office all day, right? So you're like, that's the dude with money, right? Now, when I was in the Middle East for the very, very first time, I really knew nothing about Middle Eastern culture. And it was funny. I made friends with a reporter. He was at the conference. He saw I was a speaker. He's like, hey, how's it going? Have you been to Dubai before? I'm like, no, this is my first time in the Middle East. And that kind of stuff. So he kind of just befriended me, which I appreciated. And so we sat down to lunch. And I asked him, pretty blunt question, I guess. I said, looking around the table, I see everyone wearing the same clothes. They seem to have the same, thing over their head. And I was wondering, is it the band that they have there, or is it the type of clothes, or like how do you tell if someone is worth $10,000 or $10 billion, right? So this was my question, and I asked him. I said, how do you tell which guys are the players, which ones are the bosses, who's the billionaire, and who's the average guy? And he's like, yeah, well, the different clothes don't really tell you that. There's different reasons their clothes might be slightly different. He said, look for the guy with a $25,000 watch. Right? That dude might be the rich dude. So it was pretty funny. Yeah, but the guy with flip-flops. Actually, look at. All right, I'm not a billionaire, but it's funny you guys are bringing it up. Okay? The guy with the flip-flops. Huh? Huh? You're like this. That's the billionaire. No. Yeah, so you show up like a banker, you look like you need a job. Oh, I'm going to ask this guy for money. Okay? That's some no shoes. Yeah, you know, meeting people is easy. Like how do you meet the right people? Oh, it must have been 6 years ago now. I had the president of the Ferrari Club of Atlanta at my home. How many wealthy people do you think this guy knows? Right? They're beautiful though, right? Now, in some cultures, of course, that was very insulting. So if you were insulted by the bottom of my foot, I apologize. Okay? Apologize. But the important thing that you know is that my belt matches my flip-flops. Okay? My belt, the stitching on my belt matches the stitching on my flip-flops. That's how you know you're a boss. All right, cool. Okay, so anyways, going back to this. So now this is a real challenge on the short run, but maybe not the long run. But we need to keep this below the 21. We need to keep it below these sell zones because these are daily sell zones. And this threatens the trend to the downside. So above is not good for bears, okay? Now, that means oil needs to be going up, and we know WTI is stuck in the mud. So right now, that's not really pushing CAD down, which is up, actually. You know, it's not pushing CAD up. But we also know we have some sort of transient dollar strength. And I say transient because I'm a bear on US dollar. So if it's strong today or this week, it's just nonsense. It's not real. How do I know that? I've done fundamental analysis. So I know any dollar strength is stupid. It's short-term transient nonsense. Those that are selling US dollar have made so much money that they would be insane not to take profit. So that's what's happening. So I'll look at this and like, I really want this to come down again. This would be a good price for it, of course, to be short at 134. That might not happen. So I might just take a walk until it does, right? But really, if we're going to continue, this would be the best case scenario. And if it doesn't do that, if it does this, I'll probably take a walk because I don't know if it's going to do this for 2 weeks. I don't know if it's going to wait all the way until Monday after non-farm payrolls, which is mutual fund day, right? You guys know mutual fund day, right? So anyways, I don't know if it's going to be like that. I don't know if it's going to do this for 2 weeks. It might. Well, even then I know it's wrong. It's just a timing issue. Fundamentally, I know exactly what's going to happen to the US dollar. That's why I did fundamental analysis. So if it's going to be short-term strong, I'll just take a walk. I'm done. Smell you in 2 weeks. Okay? And then I'll short it in August. Great. Okay? So that's how I look at it. It's not CAD, because we know the CAD news, the major CAD news is like 2 weeks away. So we know it's not that. And we know it's not oil because oil hasn't done anything. So it's not CAD that I'm looking at. I'm only looking at dollar. So if dollar is strong today, I don't think it'll be strong tomorrow. And if it is, I probably take the rest of the week off. Okay? Kev says, hey, would it be foolish to trade short term until your bias kicks in? No. It's more difficult and you're taking on more risk because you're trading something that you know is wrong in the long run. Right? So I don't know how you feel about that. Okay? No, you can totally do it. In this case, really what Kev is saying is that we're actually we don't have the trend. Okay? Okay? This is summer. So Kev's saying, well, I don't see the long-term conviction that I expect to be there, so how do I trade it? Well, you can trade like there is no trend, and therefore there is no fundamentals. Okay? So in that case, can you just trade the ranges and trade market opens and trade day trade? Can I just scalp? Yeah, you can do all that, sure. Sure. Yeah? And of course, we know Kiwi is also getting crushed today. Boo hoo. So, what I'd like to see as a technician, I recognize we've had a downward move. Okay? As a technician, I recognize this happened. As a tactician, I still want to buy this. So now I have to use my technical analysis and ask myself, will I have an op? Okay? What do you think? When is summer over? Oh, you'll know. This year summer will be longer than usual. Okay? Typically September. Usually when you have to get back home to put your kids in school, that's the end of summer. So are you guys working on your planning of longer term? See, I think of like you should already be planning next week. You should already be planning next month. You should already be planning the end of the year. You should probably have already sat down and done a 3 or 4 or 5 year pro forma cash flow statement and analyzed your lot size relative to your account size and figured out how much you should pay yourself, when you should pay yourself, and its impacts on your assets under management. I'm assuming you're doing all of this. I'm assuming that you're treating your Forex trading like a business and that you have a business plan and that, I mean, what kind of business doesn't have pro forma cash flow statements? You wouldn't even be able to do your taxes if you didn't have statements. Like, I'm assuming you're taking this to that kind of level. Okay? How long do you have access to the courses? 365 days. FX book helps. Yeah, I suppose. You mean my FX book? How many people here are going to trade other people's money? Like, for example, what if I started a hedge fund today? And I said, I need 25 traders right now. Okay. And then I said, okay, you have to have at least 20% of the stack that I provide you, you have to have in cash. It's pretty standard. So if I give you $1 million to trade, you're going to need to have at least 200,000 in cash. You ready to go? By the way, I need 5 years of track record right now, showing me that you can do this right now. I need 5 years of low volume or low volatility, low drawdown, consistent returns, low risk adjusted, analysis will indicate that you're a good trader, and you'll need to start with that. Bring at least 200,000 in cash to the table. You're like, well, Wayne, I want to do it, but I'm a little short. I'm a little short on the 5-year track record, and I don't have any money. But what if I could solve that for you? No, but you have to think that way, right? You're going to have to think that way. Okay? So I was actually invited to be part of a fund just recently. And I got the term sheet and the contract and everything. They wanted me to be a general partner. This was in a venture capital fund. I'm like, oh my God, I've already been a venture capitalist. Why would I want to do it again? But it sounded interesting. So I'm like, send me the terms. And the term sheet's really standard. I'll need at least $2 million of my own money. It's not to invest. It's just how it is. Like, if I don't have any skin in the game, like, who would give me their money, right? So it's just a normal standard operating procedure. Okay? How many hedge fund managers have you met that started, they're like, I didn't have any money, but now I'm filthy stinking rich, right? They always start with something, right? You have to bring something up with you. You have to have success. And if you've had success before, then you got money. You see what I mean? Like, you're going to give me a track record and it's going to say, look, I've been trading successfully over the last 5 years and I've built up my assets under management. I'll say, cool, right on. How much do you have? Oh, I grew from $200 to $2,000. Okay. You're going to need something bigger and something better. Okay. Oh yeah, Bobby, it was nothing. It's actually a small fund. That was one of the things I didn't like. They're like, yeah, we're only going to do 50M. And I'm like, 50 million? Forget it. I'm just not really interested, right? But, a micro fund is anything less than 100 million. So I'm like, look, Forex is 1,000 times better. But anyways, they're like, we'll pay 350,000 a year. And I'm like, no, I'm not really interested. Thank you. But my point was, when you look through the term sheet, that is normal, right? So if you have a track record of success, you will have money. Now you have to invest that money into your business. What do you mean your business? Well, you're in a fund. You want to be a trader in a fund. You're reinvest in the business. Right? You see what I mean? But at least now you can go from, let's say, 200K to an M. Great. Continue what you've been doing. Turn the M into 2M. Okay? So now 80% of that goes to the clients. So now there's 200K laying around. Your internal rate of return on your money is 100%. Okay? But some of that's got to go to the firm too. So you're like, well, Wayne, how long is it going to take before I get rich? Forever. So now right? So maybe your actual cash, the end of the year, let's say now you have 300 at work. Then grow it again, and then do it again, and then do it again, and then do it again. Okay? So 5 years, you're going to be trading your own money, and you get yourself up to a couple of 100K. Trade another 5 years, maybe we get you up to a personal net worth of a couple of M. You're like, Wayne, that's 10 years. Yeah, well, you're going to be doing this for 25 years, so I don't understand your problem. I got to get richer faster. I need the mansion. I need the fast cars. I need the watches. I need the jet plane. I'm the world's largest real money options trader, and I'm sitting on my jet. It's a jet. I'm a real money options trader, and I'm on my jet. So, no, dude, it's a business. It will take your entire life but if that's what you want, that's what you want. You can get there, but it's going to take your life, not take your life, but you will do this and you'll be pleased to do it the rest of your natural born life. Now, right? J.G. Wentworth, right? Gordon Jefferson says, well, I'm 65. Well, then you better get on it, boy. Right? You got to get going. So maybe trading other people's money isn't for you, because you have to understand the reason they give you money is they get to keep 80% of it. And if they don't get what they expect, you're fired. So this isn't like a love relationship. Okay? Now, I got some super secret strategies that we could offer someone that has a lot of money. And then you say, well, here's what you see every day from other investment opportunities. Let me show you what you haven't seen. And now I can maybe bring you a little more success to your life. But that's between me and the client. Yeah. But yeah, so Gordon, I don't know if you have risk capital, right? So I'm imagining you got retirement, right? You got stuff, you got income investments. So you own some bonds, you own some stocks that pay dividends, you own some real estate. Now, if you got some money lying around after that, Gordon, and you're like, hey, I got 100K that I'm going to play with, then maybe you should focus, instead of my conservative long-term focus, what if you can, I wouldn't say it this year, I would have you do this for 3 or 4 more years until you're really hardcore solid. So I'd have you invest heavily into education and training. But let's say in 3 years from now, 1,000 days from now, when you're super skilled, then you can ratchet up the risk, because you don't have, right? So I always say the math on how to make money is really easy, right? You start with your beginning assets under management, and then you multiply that over time. You might be in the situation, Gordon, where you have more assets under management, right? You have more risk capital available than someone who's 20. But you're like, but shit, I don't have the time of a 20-year-old. So what you do is you got this going for you, but you don't have this. So I would focus on the training first to get your skills good. And let's say in 3 years, or whenever the appropriate time is, you do, how do you say this? You take on more risk, right? A little more lot sizes. I'd say longer term trading. Maybe you're more mature and you can understand central banking a little more because you've been around and you're like, I've been, right? You've been watching the markets before Greenspan, right? Right? You've been around since Volcker. Okay. So anyways, you could do that, but only if it's risk capital. I mean, if you're trading your medicine money and your rent money, oh my God, full stop. Okay. But if you could burn through 100K and it didn't matter, then why don't we turn your 100K into 2 million? But let's do it quick. But that might be in 5 years. Okay. Or produce enough income where you spend 3 months of the year at the Ritz-Carlton. Okay. Okay. But like usually at your age, right? If you had 100K of risk capital, that's not a ton, and if you lost it, it's not a big deal, right? So, but what would be a big deal? What would positively impact? I mean, 65 is not that old, but 75 you need to be done, right? So you're down to 10 years. Can you turn this into, let's say, 10 million in 10 years? Well, you probably could in the sense that you don't have to eat your 100K. Like in trading your own money, it's similar to dealing drugs, right? You know you don't consume your own product, right? If you're selling cocaine, you're not snorting your own cocaine, right? It's the same, right? The secret to success with your own money is you never pay yourself, okay? So you never, ever, 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 ever touch your 10,000 or your 100,000. Never. You never, ever pay yourself until you're done. So if you got 10 years, you can figure all this stuff out, right? So like this is what we typically do, right? You start year zero. So do this in Excel, by the way, guys. Just bust out an Excel spreadsheet. Okay? Year zero, that's your starting AUM. Year one, year two, year three, year four, year five, year six, year seven, year eight, year nine, and 10, for example. Okay? And you have 100, then you have 200, then you have 400, then you have 800, 1.2, 2.4, 4.8. You get it? Boom. Somewhere around 8 years and 5 months, you did it. Oh, there it is. Thank you, Blue Boy. Don't get high on your own supply. Don't eat your pips. Don't eat your AUM. Okay? So you're being aggressive. You're doubling your money every year. You never take money out of your account. And now you hit 75 and you can live the dream. I actually know people that have done this where they had very little from the age of 20 to the age of 60. Okay? I think he was even older than that. Anyways, I'll put 60. For 40 years, he didn't pay himself. Really. I mean, he owned a machine shop. And he owned the machine shop and he treated all his employees with respect. And then when the economy tanked, because he was in Detroit, which always tanks, all his competitors would lay everybody off. And he never laid people off. He would pay them to sweep the floor, even though he's paying them as a machinist. There was nothing else to do but sweep the floor. He would pay them. But then he had earned loyalty and respect, and people started to know his reputation. So in Detroit, there's a depression every 5 years, right? So it happened a second time, and everyone went over there. But also because of his work ethic, he also made better parts. So when all the other clients went out of business, he'd get the best employees. But then when orders came back, he would get the new orders. So then he had enough money where he would just buy his competitors. They'd go out of business. He would buy their factory. He would buy all their equipment. And of course, he'd buy all the best employees. And because he was bigger and more established, and now he had a track record of success, that when the economy came back, he got all the biggest contracts. And he continued this over. Then the economy would tank. And then he would buy all his competitors. Pennies on the dollar. Hire all the best workers. Get all the best equipment. No joke. Someone would pay $10 million for a machine, and he'd buy the whole company for $3 million. The employees, the warehouse, the brand, the customer base, the inventory, and the $10 million machine. You'd get it all. So he did this over and over, but he never paid himself. He kept all the money went back into the business. So of course he paid himself his salary, but all the money kept going back into buying another company, buying another company, buying another company. And then he turned 60 and he sold his business. I think he was older than this, but I'll say 60. And he sold it after 40 years of growing bigger and bigger and bigger and bigger and bigger. He sold it for like $100 million. And guess what he did with it? He bought $100 million worth of internet stock. He bought Yahoo. He was in venture capital firms, but he bought Yahoo. He bought eBay. He bought Intel. And he turned his 100 million into billions. So by the time he was 70, he had never had any money in his life. And because he worked all day, every day for 40 years straight, he went through 2 or 3 wives, and he always was at the factory too much, and he never kept a stable relationship. But all of a sudden, boom! I don't think he had 70, but he had, let's say, he had enough, dude. Let's just say, I'll throw down a number. He had $2 billion. So he's 70 years old now. He's got a 40,000 square foot house. And it took 2 years to hand carve the marble, which he imported from Italy. So he had to import Italians to live in Detroit for 2 years to carve his foyer. He had $1 million cigarette boat. You know what a cigarette boat is? It's like taking 4 Ferrari engines and sticking it on a boat, and it goes, and you're, whoa! And he's like, woo! He never had fun his whole entire life till he turned 70. And cars and jets and parties and trips and anything you want. But he delayed and deferred his pleasure, and multiplied it, and multiplied it, and multiplied it, and multiplied it. So when I say you need to grow your account, right? In the next 5 years, you need to have a track record that shows you take low risk and you provide consistent returns, and you grew $25,000 into $400,000. Okay? And maybe I can be involved in that. You pay yourself something, you pay myself something, and then what? You reinvest whatever's left over into the new fund, which gets jacked up, right? And you do that again for 5 years. And you're like, well, that's interesting. Well, bust out a pro forma cash flow statement. Okay? You should be able to guess on what the variables are. Okay? Do the math, guys. Bust out the Excel. Figure it out. Okay? Where will you be 10 years from now? Okay? If you start with 25K, and then for 5 years, and then you get 1M, and you do that for 5 years, keep in mind clients and firms and everybody needs to get paid, so you got to figure out all that kind of stuff. But the like any other successful business, okay, it's not your percentage that matters. This is where like entrepreneurs go wrong. They're like, I have to give up 22% of my company to get, venture capital. Oh my God, well, this is $1 billion company and how dare they only offer me $2 million for 22%, the valuation. So dude, your company is worthless until you got $2 billion in the bank, right? So you shouldn't focus on your percentage of ownership per se. You need to be focused on how to increase the size of the pie. Okay? Do you want a half a personal pan pizza, or do you want one slice of a pizza the size of a basketball court? Like, it's only one piece, eh? So I want you to think of that, like, in 10 years, how can you be like, in fact, that was my friend's dad, the story I gave you. How over the next 10 years out of your grind of a career, because that's all it is, it's a grind, it's how you do your job. How do you grow consistent returns and do it over 10 years? Okay? Like, do this. Here's another thing. And by the way, I don't know if I say bust out an Excel spreadsheet and do it. I don't know. Like, if I said to myself, I don't even know what he's talking about, I don't know anything about Excel or cash flow statements, then you should learn. Right then and there, you're like, you need to know. Okay? So I would do that. I'd take an edX class for $5 and learn how to do that. But whatever. Start, like, do some comparison, and you'll see the power of AUM. Start your analysis of how much you're going to earn in the next 5 years if you have $5,000. Okay? And then do a cash flow statement over the next 5 years if you had $25,000. And see where you are at the end of the year, at the end of 5 years, especially if you never touch your kitty. But if you had to, you'll find out the less you pay yourself to this year, the more you'll make in year 5. So if you're only paying yourself a little in year 1, why? Honestly, you need it? Then you should just take a second job. Because if you just see, the thing is, if you do the financial analysis, you'll see like it's dumb to pay yourself, because your $1,000 a month, let's say in year 1, could be $10,000 in year 5. But if you pay yourself now, then by the time you get to year 5, you're making $2,000 a month. You're like, dude, why? You've given away so much. You could be earning 10x more. Do you really need the $1,000? Go work at 7-Eleven and make the $1,000 so that you don't touch, because the math is sort of the guarantee, right? Like, just do the math. The less you pay yourself, the more you're going to make. Okay? So anyways, start with that, okay? And find out where you'll be in 5 years, okay? And then pay yourself, let's say, money. A couple of $100,000, you'll be fine. But now you need the other couple of $100,000. So anyway, so now, where will you be after year 5 if you start with 1M? Doing the same thing you did before, but now the lot sizes are bigger, but nothing else has changed. And where will you be in 5 years? But now you have 80% goes to clients, right? Let's say 10% goes to the firm, right? And let's say you only make 10%. You're like, wait, I only make 10%. And I'm not saying this, I'm just throwing out a number so you can think about it. You're like, I'm only making 10%, but dude, your pie is so much better. And then why don't you grow? You want to get paid more? Well, over 5 years, why don't you do your job and turn the 1M into 10M for your clients? Do your job. That's how you do it. Increase your money, your AUM. Yeah, you got $1 million. Turn it into 10 million. This is what hedge fund managers do. Okay? And now, right, numbers start adding up. Anyways, so the basics, right? Now do that. And of course, the interesting thing is if you do that for 5 years, then maybe you get a higher stack. Now instead of, you grew 1M to 10M, then maybe the next, so there'll be a liquidity event, right? And then maybe there's a new fund with a new stack, and now you start with 5M instead of 1M, so on and so forth. But I want you to think longer term. I want you to think business. Right? If you're thinking about what's happening right now, you don't understand. I keep telling you, you need to be planning tomorrow right now. You need to be thinking about next week right now. You need to be thinking about August right now. The last 6 months of this year, when is it going to play out? When will volume and volatility return? How will the election impact things? Where are all the Fed meetings, right? Things like that. What's 2021 going to look like? Where is it that you're going? What are your goals for 2021? Are you on a 5 and 10 year path? Or are you still pissing around with a 5-minute chart, trying to get rich? Where are you? Are you on a 10-year career? Or are you locked in this 5-minute chart going, how do I make 20 pips today? Okay? So I'm trying to enlighten and take you to another level. The fundamentals and technicals today are pretty straightforward. So I want you to think about who you are, where you want to be, and how to get there. Yeah, and Raymond's like, hey, before I die, I want to trade a $1 billion account. And I can tell you there are people like that I know and met that trade money like that, and you're a better trader. I know that. I am not joking. I'm not lying. I'm not exaggerating. I'm not being facetious. I'm not sort of loading your ego. You're better than they are, honestly. So if you come along in the right crowd with the right pedigree as far as your track record, not who your daddy is. If you show up and talk to the right people, they would rather employ you than the person they're employing now. There is a giant vacuum that you need to fill. The world is waiting. The money is there. And right now, people are freaking out because they don't know where to put their money. The stock market is overvalued. The bonds don't pay you anything. Bitcoin freaks people out because you can be up 10% one day and down 10% the next day. Oh my God, who's going to manage my money for me? Who's going to take care of me? Who's going to provide income but still make sure I'm filthy, stinking rich? How am I going to pay for my big yacht? And then you show up and you're like, I won't lose your principal and I'll provide you income. Hey, I'm liquid, I'm mark to market, I earn income as well as asset appreciation, and I know what the hell I'm doing, and I'm very good at it. You got this, man. The world needs you. I'm trying to tell you how to get there. And maybe we can go on that journey together.